When you are talking, I will keep doing that.
let me admit कर लेते हैं.
Admit तो कर सबको एक जल्दी and then make me the whatever if you can.
Come on, come.
All right. So I think all of you can hopefully hear me, and welcome to a presentation on revenue-based funding from AAVEJAK. I think we'll just wait for maybe 5 more minutes to allow some more people who are waiting to join us, and then maybe we can start off. All right. So I think thank you for us for taking our time on this today. Right. I think maybe we'll start, and I think people will keep joining in, and I will just allow to kind of keep letting them in. So welcome. I think all of you are aware of. I'm Satish Kataria. I'm the managing director and founder of AAVEJAK Advisors, which is India's first revenue-based funding platform for providing startups and MSMEs with growth capital using a very innovative revenue-based funding model, about which we are going to learn a little bit more today. Right. So I think before we really start on AAVEJAK, once again a very formal warm welcome to this session. And I will also like to quickly introduce my co-founders today who are working on building AAVEJAK with me. So maybe we can start with their brief introductions and what is it that they feel about this whole revolution of revenue-based funding. So I will start with Anil Sakara. I'll just Anil, can you unmute yourself?
Yep.
Hi, okay, Anil. Yes.
Hi, Satish. Hi, Prashant. And hi, everybody who has joined. I particularly welcome Mr. Anil Sidhu, who has been a well-wisher and through whom we have got connected to a lot of investors. Anil, welcome to the event. Catherine, Dhaval, Manik, Mohit, Rachita, Shubham, Tripat. So I think I would like to talk in context of where we are today, post this lockdown. And I don't think it's post lockdown, because what I understand is that a couple of states like Rajasthan has shut down, again lockdown till end of December. And what lockdown has shown us is, end of the day, when it comes to businesses, whether you call it a startup or whether you call it an SME, what really matters is cash, and cash flow is king. It has always been the king, but then there were some investors who threw a lot of VC money at a lot of startups who were blowing it up. But I guess this lockdown and COVID has taught us the value of money, and most important, the value of money that comes from customers. So we there was a need and a demand for some kind of a funding mechanism, which would focus more on the revenues that companies or small businesses or startups are making, rather than the valuation, how disruptive they are, how unique they are, how do they compete with everybody else, and things like that. So this has been a future revenue-based funding, which means that you can get funding today based on your future revenues. And this is a debt funding, which means that you do not have to part with your valuable equity, which also means that the founders, rather than chasing the VCs who, because of the lockdown, because of the uncertainties across the world, are wary of doing equity investments, because the whole valuations are kind of haywire. The valuations that startups had before the lockdown and what is now is very, very different. And that's why we said it's really appropriate to launch it at this time. Before launching, we did talk to a lot of investors, and more than investors, we talked to businessmen. We talked to businessmen who have been running successful business, and their businesses were, throwing up a lot of cash. And we all know in the informal economy, there are, businessmen, when there's this extra cash comes in, they deploy it in the market in an informal way. But part part because of demonetization long back, and part because of the way everything is tracked and GST, and because of that, the fundamentals of these businesses are good. They still throw up a lot of cash. And so what we thought was, if we can match make, here's a business which has a long-term contract, and has assured revenues from some big customer, the government or platform or anybody. And here's an investor who's actually a businessman and understands certain business, but has a certain cash flow which he would like to invest in a very safe kind of environment, because maybe you do not understand the way VCs thing work, maybe because of the the whole volatile environment that we have, in the uncertainty that we have. So what we thought is that this is a great opportunity to launch a platform where we could fund entrepreneurs based on their future revenues. And I would say it unequivocally that all the good startups who are making good money, and a lot of investors that we have talked to, everybody has welcomed that. So I think this is kind of pretty appropriate. And Satish will talk a bit more about how this future revenue based platform that we have launched can give you 2 to 3 times assured returns, while being very easy on the entrepreneur, and how it's not just the money that we are kind of matching. We are also matching businessmen in a certain domain who want to be investors with other startups and small businesses in the same domain that the investor understands, and besides giving money, can also add a lot of value in terms of operational efficiency, sourcing, distribution, connects, the domain knowledge, and things like that. So I'm personally very excited. I see that this is a zero bullshit, funding platform which focuses on the reality of today, the reality of revenues that startups are going to make, rather than some fancy valuation or future potential, which a lot of times, look at Uber, look at everybody else. We have really no visibility, even in terms of whether the business will be profitable. Forget throwing up a lot of extra cash. So welcome once again to everybody. Really appreciate on a Saturday morning, when you could have spent this time with your families. You are sparing this time to come and learn about AAVEJAK. I really thank you and welcome you all.
Thank you, Anil. I think from now on, all the Saturday mornings will be exciting, because we will be hosting regular meets on Saturday morning, and indeed for our investors, where we will be presenting a lot of interesting deals, and taking you through, helping you to meet a lot of founders of MSMEs as well as startups who are making strong revenues, who are looking at strong growth potential, and as Anil mentioned, who could offer a very strong investment opportunity for all of us. So Ani, thanks for your kind words and your perception on revenue-based funding. I will welcome Prashant, who's my other esteemed co-founder, and Prashant also comes with more than 2 decades of experience by building leading brands from ground up and currently supporting our startups. Prashant, over to you.
Yeah, hi. Thank you, Satish. Thank you, Mr. Jakara. Welcome everybody to the first curtain raiser. I look forward to have interesting participation and definitely as the momentum in the market has gone up after the news of the medicine getting available very shortly. So, in fact, till last night I got a call from one of the guys who wanted to get some investments that he wants to buy out the medicines in bulk, and for that he needs some investments. So, so the market sentiments are up, and then definitely you can see that even in the stock markets as well. So we are looking forward to this platform which can help the SMEs or the growth stage companies to scale up their business. And from that perspective, we are already in roads of having a couple of NBFCs and banks signing up with us to support us in this venture, along with the HNIs and the family offices and the other investor communities. So the intentions are to make this as a successful platform wherein any opportunity which comes to the investors window get addressed. And as Mr. Chikara has rightly mentioned, we are not banking much on the valuation as a concept. It will be more towards the growth and an expansion. If in case you are on a profitable venture, you don't mind sharing something back with the investor to gain his confidence and keep on doing without diluting any further equity about it. So to give you a complete depth about what we are talking about, I'll hand it over to Satish to take it over from here now.
Sure. Thank you, Prashant. So I think as Prashant mentioned, the whole premise of revenue-based funding is to invest into true value of a business, right? Which is your revenues, and not look at just a metric of valuation, which always has an element of uncertainty around that, right? So what we're trying to create here with Avijit is trying to create a kind of an investment paradigm which supports startups, which support people who have been focusing on building true value, who are focusing on optimizing revenue, and they want to now look at getting some support and helping the business to grow further. So before I start with a kind of a brief presentation on what revenue-based funding is all about and how we at AAVEJAK endeavor to kind of take it forward, I'll just quickly take 1 more minute and would like to kind of throw the floor open to any investor who would like to speak at this juncture, trying to understand that what you understand from revenue-based funding so far, and if there are any specific questions that you will want me to focus on. So I will just kind of maybe we can take a minute or two, and if any investor or any of the participant out here has any quick question or something that they would like me to include as part of my presentation, I'll be happy to know that. Either you can put it message on the chat, or you can unmute yourself and talk here.
I think Satish, you will have many questions after you complete the presentation. So you can run through the presentation and then probably we can wait for the questions from the community.
All right. So we'll do that. So just to let you know how do we structure this presentation going forward. So I will be giving a small presentation on revenue-based funding and how AAVEJAK operates, and then I will also invite Tipat, who's the founder of a very interesting health tech platform called HealthGraph, which is the first startup who's kind of live on AAVEJAK right now, and who's seeking support to make it happen big, in his domain. So without any further ado, I think I will start on sharing the screen and making the presentation live. Yeah, I believe you can have a look at the screen.
Yeah, we can see it. Go ahead, please.
Okay. So revenue-based funding, is a kind of a quasi-debt structure which lies somewhere between pure play debt and pure play equity, right? And it is something which was erstwhile known as royalty-based funding, but obviously with more time and more maturity, the funding model has evolved now. It is now quite popular in Western markets like Silicon Valley, where today we have specific funds which are only working on a revenue-based funding model. So how this essentially works is, the money is given to the startup and MSMEs as a kind of a quasi debt instrument, which could be OCDs, which could be CCPS, or there are multiple instruments which are used with the assumption that this money, which is given out on as debentures, would be hedged against the future receivables of the startup, right? So the way this works is, we hand over once we have kind of done the due diligence of the startup and have evaluated the business on certain parameters, and and we are convinced that this startup is a growth net startup and will be able to meet the capital return commitments. We hand over the required funds to them. We give them a moratorium period of about 6 to 8 months, within which they can use those funds to optimize the growth level that they want to reach. And then after the moratorium period, we will start taking back a predefined portion of their gross revenues, which could be anywhere between 2 to 8%. It could be more or less depending on a deal-to-deal specific basis, right? Now, this return of capital, which will happen either on a month-on-month or quarter-on-quarter basis, again depending on how the deal is structured. Just hold on, sorry. Yeah. So this money would be, we would keep taking back this money and keep returning the money to the investors till the time we achieve a predefined rate of return, which could be anywhere between 2x to 3x of the invested capital, right? So that is how this model essentially works. So as I said, in terms of pure play debt, so the major difference is there are 2-3 major differences. In a pure play debt, your return is limited to the rate of interest that you're charging. Secondly, the EMI, the return of the capital that the founder has to give, is a percentage of the money that he has taken, right? But in a revenue-based funding, your return is almost 2x or 3x of the invested capital, right? So it is not limited to the percentage of interest that you would charge upon the startup. And also, it is a founder-friendly structure because the money that a founder or a startup is supposed to give you back is a percentage of the revenues that he's making in that specific month or a quarter, right? So even in case where because of a business cycle changes, a revenue in a particular month could be less or more, the model is flexible enough to allow him enough time and space to adjust the returns accordingly, right? So the capital returns are adjusted as per the revenues, which can be even faster when the revenues are growing, and that is the intention. That is how we are able to, those are the kind of startups that we would be curating. So I think most of you must be aware of the current challenges in the startup ecosystem. For investors, most of you have a limited access to high growth revenue positive startups. But even if you do have, the challenge comes that when you're making a pure play equity investment, the return of the money is always something which is uncertain, right? Because even if the valuation figures may jump up, you may see an appreciation in valuation. Your money coming back will only depend on when the exit will happen, right? And no one can for sure tell that when that exit will happen. But in a revenue-based funding model, your return of money is much more transparent, structured, and clear. You will know when the money will come back to you. And similarly for founders, it's a very friendly structure because founders normally are forced to then give away equity if they want to raise funds, right? And sometimes they are made to chase valuation rather than chasing actual growth, which doesn't happen in RBF model. So as I was talking about, what are the relative advantages of RBF for investors and for founders? So for investors, I think the biggest advantage is that it removes the uncertainty over the return of the money, right? So now as an investor, when you are investing into a revenue making startup, and also more than anything else, you will be able to see and have a real-time access to the operational metrics of your investing company. You will have a very high level of clarity and transparency as to by when will your money start coming to you, and until how long will the money keep coming back to you, so that you are able to achieve the target return that you had expected to achieve in this case, right? Uh, so I think that is the biggest advantage to the founders, uh, right? And the average holding period is about 3 to 5 years of investment period. And as I already mentioned that for founders, the RBF method, one does not necessitate them, they do not have to dilute equity, and they can use this money as a bridge debt or as a bridge support to be able to achieve a desired level of growth and to be able to then, if they want to do a follow-on equity investing, there is no limitation, there is no one is stopping them, and indeed they can do a follow-on round at a better valuation, right? So that becomes a win-win for everyone, even for the RBF investors in that case. There is a better visibility of funds usage as well as the capital returns. So what we propose to do at AAVEJAK is, uh, as a platform, we are a marketplace which will be connecting investors to highly curated startups and MSMEs, right? And not only that, we will not only help the startups to able to achieve the fundraising targets that they have in mind. We will also have a constituted a board of mentors and advisors, which will keep a constant look on the value optimization for the startups, because that is the ultimate goal, that if an investor has given a money to a startup, he should be able to get the money back and his returns back well in time. So we will be constantly monitoring and also supporting startups in order to achieve those objectives. Plus, AAVEJAK will be a very data rich and a data centric platform which will use the power of advanced data analytics not only to kind of help us curate the right kind of deals for investors, but also keep a constant monitoring touch on the startups, on their numbers, on their expenses, on their main operating metrics, so that if forever we have to take a call, we have to take a corrective action, we can take the corrective action and all of us can work together to help that startup sustain and indeed increase their rate of growth. So that is what we intend to do with AAVEJAK. So as I was saying, how the structure happens and how we have structured this. The funds will be given on as structured secured OCDs, wherein the funds would be held against future receivables of the company. The investments would be routed through escrow accounts, and it would be under the trusteeship of a debenture trustee as per the SEBI regulatory models. As I mentioned initially, that after a moratorium period of 6 to 8 months, the return of the capital from predefined portion of the revenues of the startup would start happening. Overall, the principal would be returned in a period of 3 to 4 years, and the returns would be expected in anywhere between 6 to 8 years, right? This could be a closer, this could actually be a faster time, so we expect that the overall investment holding period will be on an average anywhere between 3 to 6 years. The expected IRR that we are looking out is a minimum of 20% annualized IRR returns and a return of 2x on the invested capital. And obviously, as I said, one of the biggest advantages that we endeavor to bring on board would be the complete online visibility of the operational metrics of the investing companies. I am just kind of showing you that how a typical revenue-based funding sheet looks like, right? So I think you might not be able to see the numbers clearly, but this is just a kind of a sample sheet. And once you become interested into a deal and you register on the platform as an investor, you will be able to see very clearly laid out revenue-based funding worksheet of the investing companies that we're proposing to you, right? So as you see in the sheet, you will be able to understand how the revenue of the company will come year on year, what are the projected revenues, what are the revenues that they already are making. This sheet, as I mentioned, will also be able to show you what is the proposed investment, the moratorium period, the revenue share that we are taking, the return cap that we are proposing for a particular startup, what could be the proposed IRR? Like, for example, in this particular deal, we are looking at a proposed IRR of almost 25%, right? In what time,
Correct.
sorry, in what time will the capital start returning to you?
यार वो
And
दिखाने आया था फिर आज भी यार मतलब पूरा इसको DM कर दिया है.
sorry, I think I request everyone to please put themselves on mute. Yeah. And also, this thing will be able to show you the return timeline. How will your capital come back to you, which will be in sync with the expected revenue flow, right? So if you look at the cash flow statement, you will be able to figure out, and if you look at the RBI cash flows, you will be able to figure out how much revenue you as an investor will get back year on year and quarter on quarter. So every investment that you will see on the platform, you will be able to understand and view these detailed RBF sheets with them. As I mentioned, the money would be invested in a form of secured optionally convertible debentures, wherein the investors will have the right to convert the debentures into equity on mutually acceptable terms. And also, we are looking at conversion more so as a buffer, as a risk buffer for us, in case a particular startup is not able to meet their return commitments, right? In addition to which, we will also be holding a small equity stake into the company, which would be a representative equity stake, which would be used as a final kicker for the investors who have invested in that specific company. So, a little bit about the founders. I think I've already introduced Prashant and Anil very briefly. So Prashant, as I said, comes from a background of more than 20 decades. Anil sir has more than 30 years of experience into various domains, and he's a well-revered mentor and investor in the whole startup ecosystem. Talking about myself, I have been working for last 20 years, out of which the last 10 years have exclusively been in the space of startup investing and mentoring. I pioneered the concept of crowdfunding in Indian market way back in 2010, and after that, I am now trying to pioneer the concept of. Sorry, just give me a minute, guys. Yeah, sorry. Yeah, and then I'm as I mentioned, and then I'm also an entrepreneur coach, and I've just also written my my first book on entrepreneur lessons, which is called as Unblocked. Other than them, we have also some advisors on board. People like Ram, who's a very senior CA partner, and he's helping us for evaluation of the startups. And then we have advisors like Khushbu, who comes from a very senior legal experience, and Sanjiti, who has worked in SEBI in the past and helping us on various regulatory aspects. So yeah, as I was saying, I invite you all to become part of this revolution, wherein your returns are timely and are linked to the revenues of the startup that you're investing in. AAVEJAK would be the platform which would be offering you real-time revenue data access, and I think what we're looking at is giving you an option of having a high growth yet well-protected capital deployment. All right, so I will now stop sharing my screen. Right. So I think before I invite Tipat to kind of tell us about his startup, HealthCraft, which is the first deal that we are kind of evaluating on AAVEJAK and proposing on AAVEJAK for our esteemed investors out here. Do you want me to take questions now, or would you want to take questions maybe at the end of the session? I'm open to it anytime, anything. Are there any questions on the process on revenue-based funding that anyone has?
So there's one question which Neil Vora has asked, like why OCD and not NCD?
Okay. So I think again the reason is because when you're looking at SEBI guidelines, you know, a non-convert, because the idea is that we were also looking at the platform eventually becoming getting into an AIF mode. So we were looking at a instrument which could be a quasi debt and a quasi equity instrument. So our NCD, which is a non-convertible debenture, that would be more a kind of a debt instrument. So there are certain structures which will not allow investments through an NCD. Whereas an OCD, I believe, while it has the advantages of a debt structure, it also gives the flexibility of, converting the debentures, converting the amount left to equity as and when the need arises, right? And then, so that kind of gives additional risk buffer to the investors who are invested in that startup. We can always take this question offline in more detail if required.
So we have the next question from Dhaval Jobanputra. He says, how will the receipts be taxed in the hands of investors?
Yeah, so I think this would be a kind of a structure of capital gains tax, but then I think we would be, since the investment is being directly made to investors and not through a platform right now, so the treatment of returns would be, and the tax treatment of the returns would be as per the, would be handled as an investor end. So so this essentially would act like a pass-through vehicle. The platform will act like a pass-through vehicle, and hence the tax treatment would be depending on the investor, the other income sources of the investor, and how investor will handle it at his own end.
Okay. Anybody else who has any question can put it in the chat, or we can start the presentation, and please send your questions. I am tracking it and I'll make sure the questions are answered. And if there's something that you now want to discuss, you can always leave your number, and we will, if you do not want to ask the question in a public environment, you can leave your number and directly to me in the chat, and we will make sure that we call you back and answer that question. The next question is again from Neil Vora, that what if the amount is not repaid? What are the scenarios that the amount may not be repaid, and what's the risk there?
Yeah, neat. So, which is why I think, again, we were looking at an OCD structure. So, there are 2-3 ways that, we are looking at such a scenario. One, as I said, if the amount is not repaid and we are looking at a founder not able to, commit to the returns that they promised to us. One, we have an option of converting the unpaid amount into equity and then selling it off, or looking at the equity sell-off. The other, as I said, since the money is hedged against the future receivables, so we will have a lien on the future receivables, and whatever revenues the startup is making would be very closely monitored, and we would try to draw back the amount from any of the future revenues that the startup would be making, and that is what that is why we are kind of also involving the debenture trustee. Also, third factor is because we are using a lot of data integration. So we will try to closely monitor the performance of a startup. We will try to take a corrective action if we find that a startup is not able to meet the revenue targets that we have proposed, and hence we may not be able to meet the return commitment, and we will try to take corrective actions, right? But while we will always have these buffers, having said that, yes, there are risks. Obviously, there could be a risk where a startup may totally close down, right, and he may not be able to return any capital back to us. But again, I think just like any other VC model, this is it's a risk-reward balance that we have to look at. We will make all the possible attempts to closely monitor, to kind of have all the legal instruments and legal available options with us to protect our principal and protect our returns. But I think all of us are mature enough to understand that there could be risk, there could be failures also, and I think we should be able to work with that.
So you are saying there could be two scenarios. One is because of market conditions like what happened in COVID, the business itself may shut down. And that's a possibility with every business, whether it's equity funding or debt funding or whatever. The other option, other scenario that people could envisage is that the startup or the business is making all the revenues but are not meeting their obligation. And that is what Satish said, that we are going to develop systems where we are able to, connect directly into Tally or whatever system they have. And especially with subscription-based startups or startups who have a fixed subscription coming from customers, and I think this debt-based funding will be much more appropriate for those who have a predictable flow of revenue month on month based on some long-term contracts. So we'll have a lean on that. So if say a startup is getting 10 lakhs per month and 1 lakh out of that has to come to us, the money will go into an escrow account. 1 lakh comes to the investor and 9 lakh goes to that. So I think those are there, but in terms of more details, we will give that. Now, there are a couple of more questions. Deepak asked that he would, okay, before that, Vikram Gitwani asked, is there a minimum amount for investment?
Yeah, so we are looking at, currently we are looking at minimum amount of 5 lakhs per investor.
Okay, cool. So Deepak then asked, Deepak would like to understand the overall IRR and return of capital. For example, when you say 25% IRR and 2x capital with a cap. So do you want to explain that, or maybe what we can do is we can circulate a document which clearly gives an example, maybe a spreadsheet or something. What do you suggest, Satish?
So I think I think all of you can you are invited to log on the platform as investors, and once you do that, and once you kind of identify the deals that you're interested, you will be able to see the deals on your dashboard. And once you identify a deal, you will also be able to kind of download the documents as well as a revenue-based funding sheet, a sample of which I just showed you before. But very briefly explaining it to you, the IRR and the 2x capital, the way it is calculated is on a deal-to-deal basis. So when we make a revenue-based funding sheet, we are able to analyze that depending on the projected revenues and depending on our own estimate of the revenues. When will you guys be able to get your return back? And depending on that time period, let's say that we have invested 50 lakhs, and within our next 4 years, we will get back our 50 lakhs plus a 50 lakhs top up on that. So let's say that we will have a 2x return in 4 years. So depending on that time period, we are able to calculate our expected IRR on that specific deal. And by 2x or 3x, I mean that what is the expected minimum return that we are taking from that startup as part of our term sheet. So if I'm investing 50 lakhs and when I'm saying 2x return, it means that that startup is now obligated to return to me 1 crore on that invested capital. And till the time he does not give me 1 crore back, I will keep taking back the revenue which was pre-decided at the time of engagement. So that is how it is broadly calculated.
The next question is from Bharti Bihare, where he says, what is the lock-in period?
So see, technically, we all are.
Lock-in period refer to the moratorium, and after which you start getting your investment back?
Yeah, so there is a moratorium period of 6 months after which your investment will start coming back to you. See, normally, we are not looking at any secondary sales, right? And as you said, our returns are depending on the revenues of the startup. And we are believing that the average holding period in any deal would be anywhere between 3 to 4 years, right? But if someone, if some investor wants to exit before that, right? Very frankly, I haven't thought of that option yet. But if there is certain investors who have their emergency and they may want to exit, we may work out a secondary exit plan for those investors, which we can always discuss on one-on-one basis.
Can be, as long as legally this thing, the debt can be acquired by some other investor.
Yes.
Got it. So the next question is from a young entrepreneur, and Shubham Saurabh, and he says, being a young founder, he's not aware of the complex terms, but what he can see is that when they are generating a revenue of 3 to 6 lakhs per month with a burn rate of 3 to 4 lakhs, how this system will figure out what can be the expected revenue for the startup. Can we start repaying for the first month itself as per the generated revenue, or do we need to really wait for the moratorium period? And I think the next question is kind of self-explanatory. How will this benefit the founders and investors?
So I think
Would
what
you
we
like
do
me
is
to answer that, Satish?
yeah.
See, why do we have
So what
moratorium
normally happens
period?
is when you, as a founder, as a startup,
Yeah.
yeah. So yeah, I was saying, when you come to us as a founder, we will, just like any other fund would evaluate you, we will also ask for your past finances, your audited records, your future projections, and on the basis of those, we will have detailed calls, interactions with your team and our team. On the basis of those projections, we will have our own internal projections of the future revenues. On the basis of which we will calculate that, okay, if these are your revenues, how much returns will you be able to make back to us, right? See, the idea is not to put pressure on founders. We are a very, very founder-friendly platform, and that is the eventual idea, right? The idea is to be good to investors and also be good to founders. We are not biased towards any one spectrum as such, right? And ideally, we do not want to, and indeed, we are looking at startups who could become EBITDA positive already or can become EBITDA positive within first 3 to 6 months of the fund infusion. And that is the reason that we actually give them that moratorium period. If you look at any other RBF platform, even at any other RBF platform which is operating in India, which are the other platforms, no other platform is offering a moratorium. I think we are the only platform which is offering a moratorium because we really want the founder to leverage that money and grow the business, right? And add really value to the business as such, right?
So basically, what you're saying is that the moratorium is optional, but if there's a founder who's already making good revenues and just want to do that,
Yeah.
well, investor will be happy to start taking it from month one.
Sure.
Why would investor?
We can have more friendly terms with you for sure.
Yeah. So one of the question is again from Pintu and Bharti is that sectors, and I would like to say that we are sector agnostic. The whole idea here is that look at businesses which have good cash flow, as simple as that. That they have a predictable revenue pattern. Maybe it's because of a contract, maybe it's because of the kind of customers, or it's a SaaS or whatever it is. If they have a predictable revenue that they can, during our evaluation phase, show that, I think it could be any sector.
Right.
Then this thing is, Deepak Maheshwari says, thanks Satish for the clarification. Does this also mean, is the guiding IRR not being communicated to the founders? What if the company is doing well and is able to return 2x capital in say 2 years instead of 4 to 5 planned earlier as part of the initial terms? Are clauses built in to cap overall IRR for investors?
Yes. So
Let me break it into two parts. One of them is here, in terms of transparency, a guiding IRR not being communicated. I think we are going to be very transparent. Everything will be open there.
Yes.
And he says, what if they say, okay, we can return it in 2 years. Do you still want to keep it 4 or 5 as planned?
So again, the faster the money comes to us, it's good for everyone. It's good for investors. It's good for the platform, and obviously the IRR will go up, right? But as I said, when we do our own estimates, we really do very, very pessimistic estimation from a startup angle because that's how any fund would operate, right? Like even for the current startups that we're evaluating, right? If they are saying that their revenue would be 2 crore after 1 year, we actually are estimating that revenue to be just 1 crore, because we are looking at all the possible pessimistic scenarios. We are not looking at if things happen on an optimistic note, that's a bonus for all of us, right? So yes, if you guys can give money faster, I think it's good for you also as a founder also, because you will get away of that liability on your head then.
Another thing is there a many minimum floor on monthly repayment? That's one of the questions from Neil Vora.
Yes, we would keep a minimum floor, which is wherein when we break the capital into the return of the principal and maybe a coupon rate and a premium on the redemption, we would at least try to maintain that the principal portion should be returned month on month, irrespective of how the revenues flow. So we will try to keep a minimum flow.
Last question Bharti says, and it's a very pertinent question, and I'm glad Bharti asked it. Is it SEBI approved, your platform? Can you clarify that?
Yeah. So SEBI currently do not approve any RBF platform as such. But what we're doing is we are following all the SEBI regulations in the way we have structured our platform, right? And that is the reason that when we are trying to raise debentures for unlisted companies, now we are doing it through a debenture trustee. A debenture trustee would be interface between the platform and the SEBI, and that is the reason why SEBI has propagated a use of a debenture trustee, right? Even when a few lawyers are saying that unlisted companies may not require a debenture trustee, but we are always taking on a positive side of the law. We want to follow the law to the hill, and hence even when a debenture trustee may actually increase the cost of fundraising for us and for the founders, but we are still going ahead with that because we really want to follow all the existing laws of the land.
And I would like to bring this to everybody's notice that, I don't know whether Satish didn't say it. He kind of asked us to give our introduction, but nobody asked to give his introduction. See, Satish, I personally think he's the father of crowdfunding in India. He had this crowdfunding thing when even Kickstarter and all were not very popular in India. And he had this platform earlier, Catapult, which was a crowdfunding platform. And I remember him having deep discussions with SEBI and making the rounds of SEBI and all that. And Satish actually, the Catapult was acquired later on. And Satish has also been a part of the fund before. He has set up a SEBI fund. So I guess in Satish, we have a professional who totally understands the SEBI regulations. And I think sometimes when people say, what is the difference between Satish and me? I would go ahead and take chances, but I have found Satish to be more cautious and cautious on the side of being a bit bureaucratic even. Like, nahi, boss, ye nahi hoga, agreement, SEBI and all that. I'm like, chalne do, nahi hoga. So we want being a first revenue-based funding platform of this kind in India, we are almost establishing this kind of investment route in India. And we are cautious, and we understand the responsibility that is there on AAVEJAK to set this up properly, be transparent, set the kind of the leadership when it comes to how revenue-based funding can work in India. I would request all the investors to go to AAVEJAK, AAVEJAK.com. AAVEJAK in Sanskrit means catalyst, and we expect AAVEJAK to be the real catalyst between the serious investors, businessmen who besides the money will get the value, and the founders, small businesses who are profitable and may not get the right attention from the VCs and all that. And we would like to be the transparent, neutral platform in between. So Satish, would you like to, I think because today was the first this thing, and I think there were a lot of questions, we are kind of slightly running late, because ideally we would like to finish these Saturday sessions in less than an hour. Can we have the healthcare startup come on and present it, Satish, now?
Sure.
And everybody else, please feel free to keep leaving the questions. I will make sure that the questions are raised. And if you have something that you need to ask and you don't want to ask in front of everybody, send me a personal message with your number and we will certainly call you back. Go ahead, Satish.
So thank you, Anil, and I think thank you everyone for a very very interesting participation. I believe I tried my best to resolve some of the queries, and I'm always open. I will just chat down my email and Anil's email. You guys can always feel free to reach us anytime you want. So with that, I would invite Tripat to please kind of take us through his vision and his startup that he's working at, so that you guys can get an idea of what kind of deals and what kind of startups are we trying to take on board, and you will be able to understand what are the kind of growth opportunities that are there for you to invest into, right? So, Tripat, if you are there, we can start off with you. Yeah. But we can't hear you. Are you saying something?
Yeah, can you? Hi.
Yeah, now we can hear you. Please go ahead.
So can you see my screen?
Yeah, I can. Deepak, please go ahead. Yeah.
We can.
Sorry?
Yes, we can.
Looks like there's a lag. Just want to make sure.
You put it in the presentation mode and get going. It's coming loud and clear. Don't worry.
Okay, wonderful. Hey, thanks, Satish. Revenue-based funding model. Always there's a belief that good things takes time, and you're putting this as a first, platform of revenue-based funding in India. It's a bold step, and it's a very much needed model of funding for some companies. As you mentioned, that there are companies which typically follow startup journeys, go through a funding cycle which is required to build a product. But there are other companies which are at a stage where they have gone through the product development, they have gone through some phase, and now they're revenue making, and a lot of SMEs in India fall under that space, that bucket, right? So this may be a very, very good funding model which can suit these kind of startups. So I think it resonates with me when I looked at revenue-based funding model.
We would, because we are slightly running late, we would appreciate if you could stick to your presenting health graph and the business, please.
Okay, wonderful. So the agenda is to introduce Health Graph today, tell how we are creating value for customers, what is our revenue engine, which is pretty much a SaaS model with which we are presenting this, and then the opportunity for investors, how investors can make money. I'll just move to the next slide. Just a sec, let me put into the full mode. Yeah, so Health Graph is a digital health platform. We've been around since 2015. We are a profitable SaaS company. And business of a SaaS company is, as you know, is pretty much that there are customers who come in for long term. It's an annuity business. Once a paying customer is there, he's going to continue using the platform, and that's what we have seen in our business. We have been growing. We grew from in last year 3 times, and this year we have grown a little bit because of COVID, but it has been positive. So,
But I understand that you will be showing these numbers later on. So let's.
There'll be. So what I wanted to bring out was, just a minute. Can you?
Yeah, we can see it. Please go ahead.
Okay. So this is the landscape, digital healthcare. There are a lot of things happening, and what is very clear is, if you were to look at data, there's so many times data appears in this slide. What it means that all this can be done in digital health if you have structured data. And what is happening? What is the problem that we are trying to solve? Is that there is. Can you see the top as well?
Yeah, we can. Go ahead.
Okay. The problem we're trying to solve is that there is no structured data available. Digitization is virtually not there, and especially in India, where the whole penetration has not happened in healthcare. What it means is there are paper records still available to large extent, which are data consuming and retrieving data. There's data loss. Nobody's putting it in structure form. There are very, very generic solutions in the market. There are solutions. Large hospitals especially have some kind of solution, but they're very generic. And those generic solutions are not making any impact to clinicians who are the major stakeholders. And no analytics can be done unless you actually build a solid measurable data which is useful. and all the intelligence that can come. So a lot of things that are being talked about in today's market will be possible only if there is structured data collection happening at some platform. So we looked at that, and we looked at this opportunity. As of today, the opportunity is to actually create an integrated and intelligent SaaS platform, which can cater to the the market. Right now, the route that we've taken, we are totally a cloud company, and that's where we think the future is. There are on-premises solutions, and for that also in India, it's very the penetration is very low compared to US, and US is also moving to cloud. So the platform that we have is global. It's pretty much like a Gmail account. It works like that, or it works like WhatsApp. Once you have it, you'll start using, and you can use it anywhere. So for clinicians, we need a simple platform. Mostly doctors use technology to a limited extent. They're very busy people. So what we've tried to solve this problem, we focused on 4 things. First and foremost is data. Data collection should be very structured. This happens through an EHR, but we are not only an EHR company. What we do also is patient engagement. We do analytics. There is a lot of work that has happened on integrating with medical equipment. So a lot of diagnosis that is happening through equipment. All this data becomes part of this platform. There can be scans, there can be diagnosis happening, there can be medicines that are being prescribed. All that's get to one place in a very structured format. And then you can build intelligence, and we have some CDSS, clinical decision support systems built in. But to do a higher degree of intelligence, a lot of data is required, and that's where we are today in creating this solution. So if you look at the health stack that we have built, there are 2 parts to it. This is the whole health graph ecosystem. On the right hand side, where it is this green that you see, EHR, which is electronic health records, and hospital information systems, PHR is already built. These are deployed solutions on the right hand side. We have all these features deployed with more than 60 customers today. When I say 60 customers, the total clinics would be more than 150. We are generating, and these are the oldest is about 4 years old customer. And on the left hand side, if you see in the blue, all these icons are in work in progress, and we are building those products continuously. So with this kind of health stack, what we want to do is to actually take this to the market internationally as well, where this whole decision making can be strengthened. So I'll like Mohit to come in here and explain. Mohit is CEO and co-founder with me. Mohit, if you can take this thing quickly, introduce yourself, please.
Hi everyone, this is Mohit here. So just like taking a minute to visualize this journey. Like if we all have been to doctor's clinic for our medical visits, and really if we think in our mind right now and visualize that, how is our journey right now, right, when we go. So it's mostly on paper. It is a time-consuming journey. It is fragmented because we go to different rooms and different places in a hospital, and we don't know what we are supposed to do. And what is being done is also not communicated to us correctly. So it's all fragmented journey. And the most important part is data. It's not evidence driven, right? Means data which is getting collected, or it is written on a file or on a piece of paper, is not giving us any evidence back to the clinician or a doctor that how to proceed for future or this particular event that patient is sitting in front of me. So the point of care and the care itself is missing. So now that we are proposing this health stack, right, what we are saying is that, let's say, if you look at the journey of the patient when patient enters a hospital, what if the patient is given a digital tools where they can engage and they can give more information about themselves, that why they are at this hospital and why they are here today. And based on that basic information, you can easily understand, that algorithm can understand and say, okay, there are some basic tests which need to be done right away before even this patient goes and meets a doctor. So therefore, we are saving time, we are understanding more, we are doing things faster, and we are presenting more evidence and data back to the clinician or a doctor when actually patient meets a doctor, right? So that's where we are saying that, like, the second step is doing more diagnostics where it is required. And then third is doctor is looking at historical data, is looking at the current test results, is looking at the new data which is available, made available through this platform, and actually looking and tweaking the treatment, that what is required to do for this patient. And this is all based on analysis of all the data which has been collected for other patients. So you're basically using all this data in cloud and doing the crunching of it and coming back with the actionable items for this doctor to take a best corrective option for this particular patient. And therefore it makes our healthcare more proactive. So this patient is getting a proactive care. And the fourth journey that we are trying to say is that all this data is actually again re-fed it to a model which will re-analyze and assess that what should be done for this patient or other patients who are coming in the pipeline, and how to treat them better with the data that we have collected today. And then when patient goes home, how patient can communicate back to doctor or to the hospital and give more information about how the treatment is going. And therefore it creates this feedback cycle, and therefore it improves the patient care and outcomes, surgical outcomes, or outcomes in terms of their life over a period of time. So this is how the platform that we are we have worked and we are working towards is basically using data as a tool to improve basically the healthcare delivery and the decision platform for all patients in India and abroad.
Yeah, thank you. So in a nutshell, I'm just going to wrap up the introduction. Today we work with ophthalmology. When I say clinicians, each clinician is different. An ophthalmologist is different from an orthopedics, from a gynecologist, right? They need domain-focused products. What is given today is very generic product where they have to write, and the data is not very structured. So what we have done is focus specialty-wise solutions, which are simple to use. They're rich, the way they allow doctors to work the way they are doing. This is done on a technology which is very stable, very secure. We have implemented and proven that this is working. People are liking it. There is inward pipeline, strong inward pipeline that we have in both ophthalmology and ortho. Ortho product is ready. We launched it. We tested it. We at a strategic time want to go to the market, but we are already deployed in ophthalmology, right? This is value to clinicians. I promised to share that how we are making this business work. And with customers, right? This is a customer-funded business where doctors have money, they find value and they pay. They look at us as experts in that area in terms of technology. That's why we have been there with them since 2017, 15. We started working with them, understood the market. We have now customers which are with us since, and they're growing, right? They get all best-in-class compliant tech, clinical and auditable practice management. All their regulatory stuff is taken care. They increase their revenue with us. I think that's the value that we give it to them, apart from saving their time and a lot of repeatable steps, including decision-making at some point in their clinical cycle. So we're known for that, that we are the best solution for a clinician. We are not, SAP, or we are not, HR company which take care of all aspects of a business. But small hospitals use us end to end. Small hospitals don't need anything else when they start working with us.
What I see here is in the non-enterprise side, you have been growing really aggressive. 2018, you had 10, then 19, 24, and now it's gone to 62. And in the last 8 months, how has lockdown impacted your business? And what I'm seeing is that you are getting a great traction in the midst. This thing. Can you shed a bit of light how
Yeah,
this current
great question. I think doctors are very busy. Yeah, thanks for asking that question. The doctors are very busy usually, and what this COVID time and gave them is a way to kind of reflect on their business, and also they got a downtime. A lot of their staff was available for training, and we took that opportunity to work with them, and we really upgraded their practice during this time. In fact, it took us 7 days to completely onboard a very large practice in north of India, where they were.
Can you talk about names?
Yeah, we can take this is called Om Prakash, Dr. Om Prakash.
No, in terms of which are the groups or chains, the well-known.
Okay. So yeah, the well-known chains are Shankara. They are South India based. The largest customers that we have is Dr.
Shankara Eye Hospitals.
Yeah, Shankara Eye Hospital. And then one of the largest is actually with us is Dr. Agarwal. They have 90 hospitals in India and 12 abroad. They are using our product since 2014-15.
Oh, and what I understand is, what I really like about your business is there has been no churn since 2017, which means that the moment the doctors get hooked onto it, they can't live without it.
Right.
And I think the lockdown would have kind of really shown that value to them.
That's right. And there was one or two people who left us from 14-15, and that's all. And we learned why they left us, and we then fine-tuned our strategy to say what can we do better. So in the beginning there were some churn, which is very, very less, right?
One more question that I have is from Rohit. Is there any plan there's this Niti Aayog National Health Stack that is being proposed and all that. Is there any plan to integrate with that?
Yeah, so we have the sandbox. We have the NDHM sandbox. We can generate health IDs and everything. Once they start doing in other states, they have just done with some union territories as of now. So we are pretty much riding on that wave.
You are saying that the moment they go day one, you are ready to go.
Yeah. So we are built with that intent where we can the data transportability can be built in. Right.
Just wanted to add one thing for Bharati. She had one question: what hospitals have been deployed? So as Tripit pointed out, that we are not only in India, so we are also in Africa due to Dr. Agarwal. So there are about 12 hospitals in Africa in almost 10 countries. We are also in Vietnam with a very, very, very good established eye care chain of eye hospitals in Vietnam, and also we are slowly going to Nepal, maybe other South Asian countries as well. I think that will be covered very shortly. Sorry.
Yeah, we'll cover
and
that.
Mohit, one thing that I have seen with a lot of enterprise SaaS startups is that earlier they had to make a lot of personal visits internationally before they could convince. But I see a lot of startups now being able to do that virtually. Is that something that you see happening to you guys internationally?
Yeah, even internationally and both nationally as well, but internationally, yes, very, very, very true. So I'll give you a very recent example. We onboarded one customer in Dr. Om Prakash Eye Hospital, which is a very large eye hospital out of Punjab. You can search their name. They are very, very big,
I've heard of them, yeah.
Right? And they see one hospital sees about 600 patients a day. And they are seeing right now due to lockdown also, they're seeing about 400 patients a day. And me, Tripat, have not even visited them so far. We have trained this, all done remotely, everything. None of us has gone to Amritsar to meet them, and everything done remotely, and they're using right now as we speak. Because
how has this reflected on your cost of customer acquisition?
Virtually gone down to zero in a way, right?
Awesome. There's a lot of referrals that you are getting.
Yeah, today we have a pipeline which is very solid. We right now where we need money is to just service them. So that's where we're in that problem, and it's a good problem to have. And we think that because the product is right, people are finding value. We just want to kind of continue the way we are doing. We are, very patiently working with them so that we build a very nice product which works on its own rather than a lot of development. I just go forward, I think, in interest of time. In India, we sell, it's a SaaS pricing model. We sell about between $6 to $9, which is about 600 to 800 rupees per license per month, which is a very, very low pricing compared to US. And even today we sell about, pretty high prices in rest of the world. US is a very different market, very regulated. So there's certain things to be done there. This is only one product, one part of the bouquet that we are selling at 6 to 9. It has a ability to go from 15 to 20, and we have already started selling.
So tell me, typical, you are kind of founding your sweet spot in the smaller one.
I lost you. Hello? Are you guys there?
I think we lost Anil probably.
I think there must be some audio issues. Why don't you continue? Please join later.
Once he joins, I'll answer that question, but I'll continue saying that there's a lot of potential of cross-selling to the same customer with other products. For example, we also have other products which are the screens that you see in the hospital, which are telling next customer, next patient, right? That's a different product for us. And we sell that for another price extra, which is more than $6 to $7. So there is ability to cross sell. Then analytics becomes another thing. Then integration with machines that they use from Zeiss or other device manufacturers is another product that we have. So and these are partners today. These companies are big companies, are becoming partners where they don't have a solution where they can capture data and make sense collectively. And we are a preferred partner with them. We have a healthy pipeline of about 10 crore rupees in the next 3 years with expected profitability of 25 to 30%. We are profitable even today at the level that we are. And we don't want to go a route where we take too much money to build and invest and become not profitable. So revenue-based funding is a very good match for us. That's what I wanted to bring out in the beginning as well. So far we have acquired, this is now November numbers I'm mentioning, last month we have acquired about 60, we acquired 62 customers till date, and we are the trials are going on. So trial period is almost like 15 days trial period when the new customer gets the whole training and they are happy with, and they want to put their logo on their customization period and all that. That's a trial period. That is usually the time. Now, oldest client, as I told, was Dr. Agarwal. It has been around for the last 5 years. We have almost 100% renewals. 3 months is for CAC. CAC is 3 months for large enterprises only, because large enterprises, you have to understand a little bit how they work, and they have data, how to migrate their data, existing things, all those things. But for converting a smaller hospital with 5 doctors, 6 doctors, so 10 licenses is about a week today. What we've done in this journey is we have 6 million patient records, 10 million patient records of 6 million patients, and that's the power of data that we have. There are about when I say 2,200 users, these are doctors, optometrists, all the staff in a hospital, and we are present in 10 countries. India being the biggest, other are 1 or 2 centers mostly. We have good pipeline, large hospitals. I'll mention only enterprise names here. There are some enterprise geographies I've also mentioned in Bhutan and Vietnam. We're in discussion with some partners who bring their pipeline to us. They're selling something else. They may be selling hardware, and we sell software with them. So that's a model where we're a very small team. We spend about 6 lakh rupees a month only today. We are growing. We are profitable. We have strong product development team which is on an ongoing effort. As there are updates happening in WhatsApp and updates happening in Gmail, that's the way we work. The updated product gets to the customer every week. That's how things happen. We did about 1.2 crore rupees last year. We're going to do much better. We expected to do double it, but we are at today at about 1.5 crore number as of November. So we see not that going a little bit up, but I don't think we'll reach 2 crore number. But being profitable is the route that we took, rather than raising a lot of money and then worrying about the next round of funding. So that's where we are. I'll try to go. So what makes us unique and different is we've thought through the clinician's perspective for the first time. I believe people have been focusing on billing and admin stuff or accounting stuff more. We have stayed away from that. Having said that, it's not that we don't do that. We do that, but our focus is on understanding how clinicians are working, what is their need. We have also made it very domain focused. So when we go to a domain, we are not giving one solution for everybody. If you look at the product, I'll be happy to demonstrate the product sometime later. It is very, very specific. It talks their language. So they don't have to learn anything. In fact, they just have to use it. So it enhances their revenues rather than threatening. Many companies are there in the ecosystem which are taking away pharmacy revenue or some other revenue from the doctors. Doctors hate it. So what we have also thought through their mindset. They don't want any leakages in their business. So we have kept that very clear that we're not gonna make money from doctors. We're gonna make money when doctors make money and more data comes in, and that's gonna be the holy grail for us. We're very, very patient outcome focused. When we look at product, our product development is how it is gonna be relevant for the patient that is coming in. So opportunity for investors here is that we are profitable. We are growing at 20-25% every year minimum in the long run as well. We can grow faster. Of course, that will need a different kind of capital, and we are not ready for that capital. That's why we can grow as much as we can, but growth comes with some costs. So we have taken a conscious decision not to grow that route. We may end up only becoming 10 crores in 2 years, where other companies can show they can become 100 crores and raise $20-30 million, but still remain in a different phase. We are happy growing profitably. That's where I think the opportunity is to invest in us, where you can see a very secure return through this model. And we believe that risk is there, but the return that we can give is superior to that risk. And that's where I wanted to. We are Bangalore based. We have some competition in this. So we have all analyzed. We have a full deck. We can share with you more information. In interest of time, I just want to bring this to a place where if you have questions, you can ask now, or you can send it to the team, AAVEJAK team, or us. We'll be happy to answer. But we are very. What brings us to AAVEJAK is, I think, we are one of those companies who understand and that there is a value for this kind of platform. And we believe we are patiently waiting when they are up, and when more investors come in. I think that's the mindset that we have. That's what I want to conclude. That we are waiting.
Thank you, Tripat, and thank you, Mohit. What I personally really love about your business is that you are so grounded. Rather than chasing that valuation chimera, you have focused on building a strong foundation with the doctors. Another thing I love about them is that almost have zero churn now. And what I really also, one of the highlights for me was that, and this is a very fundamental thing that a lot of businesses forget, is that the best way to make money from customers is to help them make money. Because if you may help them make 100 rupees, they will willingly give you 10 rupees out of that. And I think that's a thing that you are following. And any questions, anybody you can put it chat here, and
Yeah.
So Satish, go ahead, please.
Yeah, Anil, I think while we are on Health Club, I just had to share one more screen. Just give me a minute.
Mohit, you want to add something? Please go ahead if you.
So one of the question was, what is the monthly burn rate? And Tripat, if I understand, you said 6 lakhs?
6 lakhs right now, yeah. We kept it very, very, close to
And
what
what's your current, just ballpark revenues per month coming in?
So we are about, 14 to 15 lakh rupees.
And what do you think you will close at by end of the financial year?
Yeah, we would like to close at about close to 2. That's a target. What happens in SaaS business?
What is the monthly run rate you would like to close at?
Yeah, so I don't want to get into that, because when you get into that, then I'm going to talk valuation, right? And you don't prompt me there. I come from the investment world. I come from the investment world. I don't know if you know the background. I was with Kalari Capital and I was investor there.
You are one of the toughest investors out there. So
yeah, so don't get me there.
Okay, so thank you, Tripat, for a very interesting presentation. I'll just quickly run over the kind of terms that we are working with HealthGraph on. So what they're looking out right now is a kind of a fund infusion of about 50 to 75 lakhs. And as Tripat mentioned, this is the funds that we need essentially to help build the right teams and also build the technology so that they can grow more practice. They already have a good demand pipeline. They need these funds to hire a right kind of a team and do right kind of initiatives to be able to take in that demand. The expected revenue share that we will be taking from them is about 5%. The expected return capital is about 2.5x that we are expecting from them. The IRR that we are expecting is about 25% in this scenario. We are expecting that we would be able to give back the capital, which is 50 to 75 lakhs in a span of almost 3 years. Please understand that, even if Tripat says that they will do a revenue of 2 CR, we have taken a very pessimistic scenario. So while Tripat may be quite bullish on his revenues from his side, we have taken a very conservative estimate. All of you are welcome to go on AAVEJAK, register as investors, and you will be able to see the estimates and the revenue estimates that we have taken on board. You will also be able to download detailed analysis reports, which are from our side, a kind of a third-party evaluation for HealthGraph. And we're expecting that the total capital, which is your principal plus your returns, would be coming back to you in a span of 5 to 6 years. And you're also proposing to take a kind of a representative equity stake of 1% into the startup for a final trickle to the investors, right? So these are the broad investment terms that we have kind of agreed upon with HealthGraph. So if any one of you are interested to be part of this investment round, they can please go on AAVEJAK, log in as an investor. It just takes 2 minutes of filling in some basic details, and then you can express your interest out there, and we'll be happy to share more detailed information with you out there. Yeah. So I think that is with respect to the deal, and I think we are open to any more questions if anyone else have more questions. Yeah.
I think we are good as far as the questions are concerned.
Yeah, there is one question I can see. There is there is team cost involved? Yeah, the team is founder salary is there, and we take salary only to the extent that we add value. We take very less salary at this point of time. We are not. We can take salary as much as we want, but I think we are investing back in the business. It's at some point of time when we make a lot of money, we'll take a lot of salary for sure.
I like that. So Satish, would you like to wrap it up?
Yeah, so I think with that, I think we have attempted to talk about revenue-based funding, how it works. Also try to highlight one of the first deals that we have identified on the platform, and that we really want. I think we really believe. I think again, the reason that we believed in this deal was because one, I have personally known Sipat for last 2 years. I understand that he comes from an investment background, so he himself, would understand the value of investor money. I can have confidence in him and his team that they will truly value the money that you invest in him, which I think you can already see that over last 3.5 or 4 years, he has single-handedly focused on building the business. They have not taken any external funding till date. They have bootstrapped the business till date and have reached to such a level of revenues. Also, while you can say that the EHR segment or the patient management segment is highly fragmented, but I think what they have done is over last few years, they have very carefully identified their unique niche, right, which is the ophthalmology space, and they have kind of become masters in that one single space, right? So even if you look at that single medical domain, I'm not looking at other, there could be 20 plus medical domains, as Sipat was saying, there could be gynecology, orthopedics. I'm not even looking at those domains. I mean, even if you look at ophthalmology, that itself gives them a very, very positive revenue optimization scope. As he was saying that he can even become a 10 crore company within a span of next 3 to 4 years, looking at just one medical domain. So I think they have built the product, they have tested the product with actual customers, and given the fact that they have almost 99% repayment and a customer retention, itself talks so much about the product that they have built. So I think it's a good opportunity for any one of you to look at the business in more detail, and I think all of us would attempt to do justice to your investments out here. I've already written my email. You are free to ask me or reach out to any one of us for any questions that you have. So I think with that, I'll conclude this session. Anil, would you like to have any last words?
No, I guess first of all, I would like to thank everybody. People have been pretty patient, and we have taken almost 1.5 hours. And I think we took more time than we had bargained for. But I would say, this is great because I think a lot of really good questions are coming in. And I can see that the question, from the quality of the questions, that there is an interest in this thing. And I think this is kind of the curtain raiser was kind of a thing that this is what we are. And this is the kind of startups or businesses that we will bring to the investors to the table. And these are the business we love. We love entrepreneurs who build foundation for a long-term business, rather than playing that valuation game or iski topi uske sir, the drama that goes on. I'm from Bangalore and I see it happening all the time, So thanks a lot, everybody, and look forward to presenting the next rocking startup next Saturday.
Yep. Thank you all, and once again, have a good day. Bye.
Yeah, thank you, Satish. Thank you, Satish. Thank you, Anil. Thank you, Prashant, for having us here, and thank you for listening, everybody. We'll welcome any query through AAVEJAK. We'll be looking forward to build a new community of people who believe in building businesses which are customer focused and funded. I'm saying there can be different kind of communities, right? VC, I'm not against VC community, but the thing is,
I also don't have against the VC guys. They fill a certain slot, but I think they have got a disproportionate attention of the startup world and a disproportionate kind of responsibility, or disproportionate amount of people look up to them as saviors or funding and all that. Whereas if you look at internationally, a lot of debt is much bigger game than pure VC play. And this is the foundation we are laying in India, and we love entrepreneurs like Tripat,
Thank you guys.
And take less salaries.
we build companies, and when we build large revenues and we deserve salaries, we will take it.
Awesome, man. Give yourselves a good bonus in the end of the year if you do more numbers than you have projected.
Absolutely. Thank you so much, guys.
Thank you, guys.
Okay, guys, have a nice weekend. Bye-bye.
Bye.